this video, I wanted to show you exactly what I do when placing an options trade and how I do it. I practice using a paper trade account with Thinkorswim. I'm going to show you exactly what I do when I look for it. So stay tuned. The first thing I do, I go in, I'm looking at certain stocks that I might want to consider purchasing options in. So I go to this one. We're going to do, for an example, EWZ. And what I do, I go under charts, type in EWZ, it gives me some basic information. What the stock price is currently, how much it was up today, and how much a percent increase that was in the stock price. It gives you the bid and the ask. It's all kinds of information. You can go back however long you want. Right now I've got this sitting at 6 months. The style, I can go in, I can change that if I want. Time frame, I can make it whatever I want. We're just going to leave it at 6 months. So what you see here is every day's prices for the last 6 months. How it's been going up. This is a candlestick chart, and I'll make a video explaining how to read those. But for now, it's more or less you can see where it lands at. Now, what I did, I made a trend line going on here. I've got support, which is this bottom line, and I've got resistance. And how I do that is just based on the tops and bottoms for how it's been going since the end of March. You can kind of see how the stock's been going up and down and up and down and up and down, but it's been staying between these lines. Now, you'll see right here in the last few days, it's starting to break above this resistance. It's breaking out of the pattern. So since it's breaking out of the pattern, I think, well, okay, well, it's going up here. The old resistance might become the new support, and you're going to be having prices up here. Now that may or may not be true, but based on technical analysis, it might. The blue line, you can follow it, that is an 8-day, or a 20-day simple moving average. The green line is an 8-day exponential moving average. And basically what that's telling you, if you'll notice, the 8-day is moving faster, it's going up at a higher rate than the 8-day or the 20-day simple moving average. And because it's going up faster than this one, you can see the reason why. The last 8 days are increasing faster than the previous 20 combined. And it's just a weighted average. So let's just say I'm satisfied. I've seen the crossover and I believe that this price is going to go up. So I want to place a trade on this. I'm expecting it to go up. I'm going to buy a call option if I place a trade. So let's go look at the trades and see what we have. I click under trade and it gives me all the different opportunities that I have in my options chain. It's got your expiration date. It's also got the days until expiration. So what I look for is somewhere between 3 and 6 months. Typically I'm looking for about 4 months, so that's about 120 days. So I'm going to scroll down, and this is the closest one I get, a September 30th expiration. Alright, now when you first open it up, it might have limited strike prices that you can see, but you can always go and adjust it to however much you want if there's too many or too little. But I'm going to go ahead and pick all. If you'll notice, your calls are on the left and your puts are on the right. If you're expecting it to go down, you're looking at this column. If you're expecting it to go up, you're looking at this column. So my next step is looking, do I want in the money or out of the money? Well, if you're just starting out, you're probably going to do out of the money. And you'll notice the blue here and the blue here, that means in the money. So you're going to want to go for the ones that are not there. And specifically what I typically look for is I start with a delta. I go down and I look for somewhere between 0.2, 0.3, generally somewhere around 0.3, a little bit over wouldn't be too bad. So I'm looking at either 0.27 or 0.32 delta. And I'm going to go over next and look at my open interest, and that's how many contracts are open with that particular option. And what I want is at least 100, so that's already crossing this one out. So 0.32 would be my option to go with if I chose. This right here is a percent change, and that tells you how that option had performed in the last day. So if I were to have purchased this at the beginning of the day and sold it at the end of the day, I would be up 22% on that particular one. And since this is, let's just say for easy math, I got it for $1.20 per share. There's 100 shares in one contract. That's $120. So if I made 22%, that's like, say, $25 or so. Of course, I wouldn't want to do more than 20 contracts in this one because I don't want to have more than 10% in there. So I wouldn't want to do more than like 20. Which granted, 20, that would be about $2,400 if I did 20 contracts. I typically don't do that many. I might do 10. That would be $1,200 or so if I got it at $1.20. And if I got 22% of that, I'm looking at about $250 profit in one day. Generally, I'm going to look for a little bit more return, and I'm going to hold it more than one day. Generally, all the time, I'm going to hold it more than one day. So let's look at this one here. This one is a 45 strike call, expiration on September 30th, 2021. It's got a delta of 0.32. It's got an open interest of 244. So say I'm interested in buying it, I just click here. Note it says this is a simulation, not a real trade. This is important if you're not wanting to put your real money into it, you're just wanting to speculate and use paper trading. It needs to say this. You can adjust the amount of contracts you want. If you just want one, you can do that. If you want 10, you can do that. It's standard, it comes at 10. There's a way you can adjust it if you want to automatically set it to 1. And I would recommend doing that in an actual account because you don't want to end up spending more than you intend to if you were to forget this. So you're reconfirming everything that we looked at earlier, and this is important. This is the price you pay. Now there's a bid and an ask price. The ask price is what they're hoping to get, and the bid is what they would buy it back for. So they're hoping to get $1.27, but I don't want to spend that much. So what I can do is I can drop this. I generally go down to where it says mid at $1.23. I might give a little bit more if I was expecting this to be a really good one, but I try to get it at $1.23. You can also do different types of orders. You can do market, which is just going to put it at whatever the market is when it places that trade. Go back to our limit here. You can do stop, stop limit, trail stop. There's all different stuff that you can do, but for now we're just going to do a basic limit, and that's what I typically do. And if I'm satisfied, I confirm it. Again, this is a simulation, not a real trade, not risking real money. The cost of the trade for 10 contracts be $1,236. Just divide that by 10 if you're going to do one contract. Check and see, are you in margin or IRA? And there's a difference, but for paper trades, it's not going to make a difference in the amount of money that you have or anything. You're just learning how to trade. But if you're doing your real account, you'd want to pay attention to that. If you're satisfied, you'd go ahead and hit send. Right, and let's take another look at one more and see what we get here. So we're going to go to the charts and look at trade that I play with this one a lot, VNO, and I actually placed this trade last week. VNO, I have a pretty solid chart here. It's steady, it's staying stagnant. If you notice, it's tending to go up a lot faster here, and it's broke through resistance. So I'm expecting, okay, this one's going to go up. This day it actually went up about 33%. So based on that right there, I'm thinking it's going to a new pattern. Let's see what we have. I have a position open here. This is the one that I bought. Of course, it made money and it went back down and went up. It's going through its patterns. But same concept. I'm going to look through here. This would have been the one that I picked. It was around 0.3 when I purchased it. And if I want to place a trade, I can place one here. Same thing, click that, go through, verify, everything looks good, and I'd come down here and get it. Confirm, make sure this is a simulation, not a real trade. Make sure you're in the right account. Make sure everything looks good. If you're happy, you hit send. So pretty straightforward. There's a lot of tools that you can do. There's a lot of ways to analyze things that's going on, your risk profile, probability that it'll end up wherever you want it. There's a populate, takes it a minute. But that's the basics of doing a technical analysis approach, looking at it. There's other indicators that you can have, lagging indicators, stochastics, and all that sort. But for right now, that's the easiest way to just kind of get a grasp on it. Go through, look at a few different stocks and see what you can gather from that. I hope you guys got some value out of this video, and I hope to see you in the next one.